The fight between Trump and China just got real, and now crypto got caught in the crossfire. In just 7 minutes, the US stock market erased $450 billion in value. That kind of drop usually comes from a flash crash or a black swan event. But this time, it started with cooking oil. Moments after Trump threatened to start producing cooking oil in the US instead of China, the algorithms kicked in and the S&P 500 collapsed. In a world where headlines move faster than fundamentals, that one sentence wiped out more value than the GDP of some countries. That moment was a warning shot, a glimpse of how fragile this system has become. Markets are running hot on emotion, headlines, and reflex. The smallest spark can light up every screen on Wall Street. And that's why Bitcoin, gold, and other hard assets are attracting capital from every corner of the market. Today, we're breaking down how Trump's trade war rhetoric, Powell's pivot, and the quiet return of liquidity are setting the stage for a massive market rotation, one that could flip global capital back into crypto faster than most investors realize. By the way, guys, stick around because later in this show, we got an awesome surprise and a giveaway for you guys from one of my portfolio companies. Very excited to tell you guys about that. And who doesn't love free money? While the crypto charts cool off, the real action is happening in politics and economics. President Trump and President Xi are preparing to meet in South Korea from October 31st to November 1st during the APEC Forum. And Treasury Secretary Scott Bessent said the 100% tariff does not have to happen, signaling the communication channels are open. We talked about this 100% tariff and the reason that instigated the Black Friday. But China's Commerce Ministry responded that it wants to solve the issues through talks. So at least on paper, diplomacy looks alive. But behind closed doors, Washington is already drafting new export license requirements for software sent to China. This is what's really happening. Competition under the surface while both sides pretend to negotiate. Then came the trigger. Trump accused China of an economically hostile act for halting US soybean purchases. Within minutes, the S&P lost $450 billion in market value. That signal statement turned into one of the fastest risk-off cascades since 2020. This is why investors are glued to every update. The US and China are not just negotiating over trade anymore. They're negotiating over the future of global power. And that kind of uncertainty is exactly what pushes capital into Bitcoin. Now, guys, first of all, I think it's a little bit ridiculous and quite funny, but mostly ridiculous that, that we think that we can tell China who they want to buy their soybeans from. Like, I personally believe that everyone should be free to do trade with whoever they want, and that's it. And if we want to make our own cooking oil here, which is probably shitty seed oil anyway, don't be consuming seed oil. Get really good olive oil or avocado oil or coconut oil. Don't get these seed oils. They're horrible for you. And that's the shit that we're buying from China anyway. So good. I hope that we make them here. But anyway, I think it's ridiculous. Let me know in the comments below what you guys think about this little beef between Xi and Trump about trading soybeans and cooking oil. For me, it's kind of crazy. But I also think what's happening here with, the US drafting up these export licenses for software and, these kind of things it's just like puffing out their chest, right? And then trying to put kind of all their cards on the table to show the most extreme circumstances and how that will affect each other economically if they're not able to come to some sort of fair discussion in South Korea. And I think that they will, right? I mean, it's not good for either side to continue a real trade war. And again, I think this is like one of those kind of things where Trump just throws out a bunch of big numbers, and then when he gets to, and uses that as a starting point for negotiation, so they meet somewhere in the middle. I mean, remember when we first heard of all the huge tariffs coming from Trump and the Trump administration, and how that created a massive market sell-off? Everyone's scared to death, and then a week later, we figure out that we're going to extend these deadlines when we negotiate. And at the end of the day, it really ended up being not a big deal. I believe the same thing's happening here. And while everyone was watching the tariff drama, Jerome Powell quietly made one of the biggest policy shifts of the year. The Fed chair confirmed that the central bank may stop shrinking its balance sheet in the coming months. This was huge. In other words, quantitative tightening, or QT, is ending. Right? This is incredibly bullish for our markets, but they haven't really reacted yet. And Powell also said that the labor market has weakened enough to justify continuing rate cuts. So we were curious if rate cuts were going to continue like we thought that they would this month and in December. And that speech that he made just reconfirmed that they are likely to happen. And they're likely to also happen through next year, especially with the new Fed chair coming in May, who said that the fair rates should be at somewhere like 0.5%. So I expect these rate cuts to continue starting this month and going all the way into however long it takes them the next year or two to get down to that 0.5%. But the markets typically are able to kind of boom when interest rates become very low. It makes the cost of borrowing cheaper. It makes the cost of credit cards cheaper, home loans cheaper. Everyone can refinance. It makes borrowing money and being able to get access to money again at cheaper rates. It allows new businesses to start with business loans and all these kind of things, right? So it's very bullish for our economy, and that was huge news. So quantitative tightening, which takes money out of the economy, they do that. The Fed does that by basically after COVID, they needed to stimulate the market and put more money out there. So what the Fed did was they went and they bought a bunch of assets, bonds, stocks, equities, treasuries, whatever. And what that did is they took their money in their bank account and spread it all over the market and then bought a bunch of these assets. They did that so that the money could go into the economy. And that is essentially more stimulus into the market. More, the asset prices go up because they're buying these assets. And so they're putting more demand and buy power into the market, which is creating the prices to go up. Since last year, the Fed has been tightening. What does that mean? Well, that means that along with higher interest rates, they also started selling all their assets. And so what does that mean? Well, that means that they're going to sell their assets, their stocks and the bonds, whatever, and they're going to take money from all these people and they're going to put it back in their bank account, which is effectively tightening conditions or removing liquidity from the market. Guys, Powell's tone is simple. Growth is steady, jobs are soft, and liquidity is coming back. Arthur Hayes summed it up with his usual fire. He said, QT is over. Back up the truck and buy everything. He calls it QE for the poor. And he's not wrong. Every liquidity cycle follows the same pattern. Once the Fed stops tightening, capital starts looking for new homes. Also keep in mind that the M2, check out this chart, says we're basically going to the moon, right? Following the M2 money supply has always been a leading indicator to Bitcoin's price, typically leading by about 3 months. So as you guys can see from the chart, liquidity is going absolutely parabolic. When the global money supply expands, assets tied to liquidity, especially Bitcoin, tend to move first. And the signs are already here. Total stablecoin market cap just hit a new all-time high of 300 billion. Remember, guys, it wasn't too long ago when we talked about hitting 250 billion. That's another 50 billion injected into the crypto markets in a short period of time. And maybe it's sitting on the sidelines waiting for what they feel the right opportunity is to come in, right? What that signal is, I'm not really sure. But that's always been a really good sign. As long as more stablecoins are coming to the market, that means more capital is leaving fiat and coming into the crypto rails. And usually a large amount of that stablecoin translates into buy pressure on the market. Now, could there be a lot of stablecoins coming to the market because we have the Genius Act now and people will be using stablecoins in their business for payments? Like, probably. Maybe that's why it's exploding so fast. But stablecoin, nonetheless, it's been a really good indicator. And you can't just use one of these indicators alone. But when you combine them all together, you start to get a pretty good picture. And at the same time, guys, the IMF now projects global public debt will climb past 100% of GDP by 2029. Imagine that. We're accumulating more debt than we're producing as a nation every single year. How in the world do you get out of that long term? It seems pretty much impossible. How do you kick the can down the road a little bit longer? Well, you print money. So guys, after each tightening phase like quantitative tightening, 2019, 2020, 2023, Bitcoin led risk markets higher. This time, the setup is even bigger because while the Fed is easing, fiscal spending is exploding. Liquidity is no longer just coming from central banks. It's coming from governments, private credit, and tokenized finance. And gold is not slowing down either, and neither is silver. Gold just broke $4,200 an ounce, up 60% for this year. And silver's gained 85%. Together, they've outperformed the S&P by 4 times. Global gold ETFs pulled in $68 billion so far. And when defensive assets outperform risk assets inside a bull market, confidence in fiat weakens. And remember, the US dollar is down 12% this year. Investors are preparing for non-stop spending, from deficits to the AI arms race. The US and China are spending billions on chips and data centers. Every project adds more debt and more printed dollars. That's why gold, silver, and Bitcoin are all running together. The system keeps expanding the money base, and capital keeps looking for scarcity. Even with record prices, institutional exposure is still tiny. Wall Street's average allocation to gold is just 2.4%, and its average allocation to crypto is only 0.4%. But keep in mind, guys, that was like 0 a year ago, right? That gap shows just how early this rotation really is. The reallocation into hard assets has barely begun, and it shows you guys just how truly early you guys are to this crypto revolution that's happening right in front of our eyes. We're just seeing the very first movers and reporting to you on a daily basis of the first movers, right? And you guys might say, well, God, there's been all this great news and so much bullish momentum fundamentally for the crypto markets and Bitcoin especially. Why are we not seeing a Bitcoin at $200,000, right? And it's just because this is all starting to happen. When we hear about, what I'm about to talk about in a second, but these different banks now offering crypto to their customers, just because they announce it doesn't mean that the customers are rushing in to start going, right? They have to start selling these products. People have to become aware of them, et cetera, et cetera. The US government now holds more Bitcoin than any other country on earth. And it basically has already, but check this out. The DOJ just claimed 127,000 Bitcoin from Chen Ji's global fraud ring. And it was like this, they called it a pig, butcher, kill, something or other. But basically, it's like when you have a bunch of people who are, and I've seen these documentaries, and people in like Myanmar and stuff like that are being basically slaves to these Chinese regimes who are just making them find lonely older people, and they're built, they have a fake profile picture, and they start chatting with these people for a long time, for weeks or months. They build rapport, they make them think that they're falling in love, and then eventually they come up with some story and an urgent need for them to help them, and they usually ask them to send Bitcoin or something like that. But man, 127,000 Bitcoin, like $36 billion from this crate, it just shows you the scale of these scams that are running around the world. It's mind-blowing. If you guys ever get a chance to check out, I forget what they're called, but they're like these fraud factories, and they're setting them all up just north of the Thailand border in Myanmar. And there's been some really cool investigations where they go and show you kind of inside what's happening and just how crazy it is. It's nuts. And Senator Lummis said the latest seizure of 127,000 Bitcoin can strengthen America's strategic Bitcoin reserve, calling it an example of how sound policy can turn wrongdoing into lasting national value. Her statement makes it clear Congress sees Bitcoin both as justice and strategy. It's the second largest asset forfeiture in DOJ history, second only to Silk Road. Under the Strategic Bitcoin Reserve Executive Order, coins that can't be tied to victims stay on the government's balance sheet. As soon as I saw this headline, I knew that we were stacking sats. And now we have 27,000 Bitcoin, which is absolutely nuts, which puts us at least twice as far as the second holder, which is China. Treasury Secretary Scott Bessent said the goal is to defend victims, punish abusers, and build national resilience. So a couple thoughts on this is, one, this is good for our markets because when you have someone, a bad actor who's sitting on $36 billion of Bitcoin, you never know when they potentially might just crush the market, because you can absolutely destroy the charts starting to sell that on the market. So this is very good in the way that the US has now taken over that Bitcoin and put it in their long-term strategic reserve. It's the beginning of what we believe to be a larger initiative. But this news alone, just taking it from someone else and accumulating it, it's not a really bullish signal. What we really need to see is one of these bills passed, preferably Senator Loomis's, where the US actually starts acquiring Bitcoin and has a mandate to acquire 1 million Bitcoin a year for the next 5 years until they reach 1 million Bitcoin purchased. And that could happen, in the next month or 6 months. Whenever it does, I believe that's going to send the markets absolutely vertical. And then you've got Larry Fink, the CEO of BlackRock. He just dropped a staggering number. More than $4.5 trillion are now held in digital wallets across crypto, stablecoins, and tokenized assets. BlackRock is building its own proprietary tokenization platform to handle that shift. And at the same time, you got JP Morgan, who confirmed plans to launch crypto trading services for its institutional clients. Remember Jamie Dimon from JP Morgan calling Bitcoin crap, and he threatened to fire any of his employees who were trading it or buying it. At the same time as saying all this, one of his other companies is going and buying it all. Crazy. But now they've publicly crossed the chasm and are now starting to acquire it themselves or offer the services. And sure, they're acquiring for sure, but they're finally starting to offer the trading services to their institutional clients. And then you got sovereigns who are now joining in. Bhutan just migrated its national digital identity system from Polygon to Ethereum, making it the first country in the world to anchor digital identity on a public blockchain. Bhutan already mines Bitcoin with hydropower. Now it's building identity infrastructure on Ethereum. This is no longer crypto chasing Wall Street or governments. It's Wall Street and governments building on crypto. And Ethereum's growth continues to mirror the expansion of global money supply. Analysts project that fair market value ranges between, get this guys, $8,000 and $10,000 by early 2026. Institutional staking and ETF inflows keep deepening that floor. During the crash, Ethereum and Layer 2 gas fees soared past $100, but Solana's fees, on the other hand, even during the most volatile times, stayed under a penny. And Solana processed more transactions than Ethereum and all its L2s combined that day. That performance under stress earned Solana real credibility. In the last 24 hours, Solana led all chains in stablecoin inflows as well. The top dApps on Solana, like Pump Fund, Axiom, and Radium, they brought in more than $18 million in weekly revenue, with Radium alone clearing $1.75 billion in daily volume. Meanwhile, Figure is launching YLDS, and this is an SEC-registered treasury-backed yield token directly on Sui. So this is really interesting because it's basically going to offer real yield back to anyone who's using this stablecoin. And this is something that I've always thought, and there's other smaller players who are doing this, but this is pretty big institution doing it. But I've always thought that Tether makes all their money by their $180 billion or whatever that are in cash deposits that are now buying short-term treasury, and they're yielding 4.5%, 5% on that 180 billion. That's how they make their money. That's all kept by them, the central company. What if there was a stable coin that generated yield and gave that back to depositors? I think that would be a pretty cool thing. Will this be enough to build a real market? Well, I think so, because the big bosses, the Larry Finks and the other guys of the world, believe that we're going to see, trillions and trillions and trillions of dollars in stablecoins over the next 5 years or whatever. Now, if you're a huge institution looking to digitize your business and get into stablecoins and start using them and offering them and whatever, and you're going to need to have billions and billions of dollars in stablecoins, well, wouldn't you want to do that in a protocol that gave you yield on your deposits? That's what this is doing, and they're doing it on Sui. All right, guys, and now the fun part. And speaking of Sui, one of my portfolio companies, I'm also an advisor, you guys know if you've been following the channel for a while, is BluWhale. And BluWhale is one of the most exciting projects to launch, predominantly building on the Sui blockchain. There'll be multi-chain, the token itself, but it'll be the first real, legit AI project on the Sui ecosystem. And they've been doing a lot of things right. They're doing their TGE next Tuesday, and they will be launching on several tier 1 exchanges. But what I wanted to do was, because there's no public sale, so there's really no way that you guys can go and buy the tokens right now. You know, I think it's gonna be a pretty hyped launch. What I expect to happen is like every other hyped launches where the chart goes up and then it crashes for a little while and then it continues to build itself up. So I would suggest, if you're interested in getting involved, watch and kind of wait after the first 24 hours for the price to kind of stabilize and then maybe start DCing in there. But what you can do and what you can win today, guys, is the BluWhale nodes. And running a node means that you get tokens for running it and helping to run the network, which is a node-based network that does all the computation and validation in their AI network, essentially. So guys, this is free money. And what I'm asking you guys to do to win this, and today we're giving away 10, but I have 100 to give away. So over the next several weeks, we'll continue to do these giveaways, and just make sure that you're watching here and follow the instructions, as they might be different every time. But today, what I want to see from you guys is comments on this video. And I just want you to be funny and creative, make it the most entertaining, make me laugh. And those of you who do, the top 10 will get a node, and we'll hook you up on how to get that node so you can run it and start earning BluWhale tokens right away. On top of that, as you guys can see, what I've done is I changed my profile picture to one of these BluWhale little cute whales, essentially, in my public support for BluWhale. And you guys can get one of these too. Again, the top 10 people who are winning the nodes will also get one of these NFTs. Now, you may or may not want to put it on your X profile. I chose to do that. But the real interesting thing here is that BluWhale, in the future, not too long, maybe a month or two from now, they will actually do their own NFT collection that is limited and has a finite supply and will be worth some money. And having one of these NFTs that you win today will actually get you a free mint when they launch their collection in the future. 2 free ways to win money. Just be entertaining and leave me a comment below. And guys, stay tuned, because randomly over the next several weeks, we'll be giving away the rest of these 90 nodes and some more NFTs. And guys, just a quick disclaimer for the BluWhale giveaway. 1, it's not sponsored by YouTube. I don't know why I have to say that, but we do. 2, BluWhale's not paying me for this giveaway. Like I said before, I'm an early investor in BluWhale. I'm an advisor. And I talked to Han, who's a founder. I said, hey, Han, can we do something special for my community? And he said, yeah, cool, let's do this. So that's a disclaimer. So guys, from tariffs to tweets to trillion-dollar pivots, every move now runs through the crypto economy first. The world is rebuilding its financial architecture on-chain, nation by nation, institution by institution. Gold, Bitcoin, Ethereum, Solana, Sui. They're all sending the same message. Faith in fiat is fading. Energy, transparency, and code are becoming the new collateral. And Elon Musk recently even said, Bitcoin is based on energy. You can issue fake fiat currency, but you cannot fake energy. The flip already happened. The only question is who sees it clearly enough to prepare before the next big wave begins. And now, before we end it, guys, I just want to give another disclaimer here. These are all fundamentally very bullish signals. Yet the market feels weak. We're printing lower highs, and you want to see higher highs. You want to see momentum coming in. And you know what? But what really kind of destroyed us was Black Friday. It seems like we had strong momentum just before that. And now we're seeing another recourse of sensitivity. Another thing that I think was contributing to the pullback today was market makers and exchanges who made $19 billion on Friday knew that a lot of people were going to buy the dip or take positions on the dip and open longs. And they did. And today there was another $500 million or something liquidated. So while I personally believe, at least for now, that we still have a rally to go, and I'm going to make a video later this week about, do we really believe that we are going to see an extended cycle beyond the end of this year? Because history says, if we follow every other crypto 4-year cycle in the past, that means that around now, and this is also concerning, Bitcoin should basically be topping out. Could we have topped at $126,000? Maybe, but I just don't feel like that's true. Whether we get this parabolic run in Q4 and it ends at the end of the year, or we go into the extended 5-year cycle, which guys like Raoul Pal and Arthur Hayes and others are talking about. And for a lot of the reasons we discussed today, it seems like that's feasible, like it's possible. So I'm gonna make a video later for you this week talking about that with more evidence and things like that. And I also wanna say that it is possible that we witnessed the top of the market already. And so I'm just sitting tight right now. If we were to continue dropping rapidly, I guess I would kick myself. And hindsight is always easy to see. And looking back at the markets a year from now, you can say, oh, it's clear that that was a top and we should have sold and took profits. But for me, there's just, despite the charts and despite price action, there just feels like too much momentum to me. And so I'm in a hold position. I'm not doing any margin trading. I'm not buying anything really right now. I'm just sitting and watching to see. And as time progresses, data will give us more validation, whether we're continuing to move up, move sideways, or we've topped. And if you're subscribed and you watch the show daily, then you'll be right here along with us as we gather this data and provide as clear of a picture as possible, guys. That's gonna wrap it up for today, guys. Remember, stay sharp, stack your Satoshis, and I'll catch you guys on the next one. See ya.